You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Nader from Benguela Global Fund Managers. Be sure to send your questions through email, stockwatch@bdtv.co.za, SMS 41392, or on X @BusinessDayTV using hashtag Stockwatch. Gents, appreciate the time. Let's start. We had local inflation out for February, 3.2%. We've now got the FOMC, Fed tonight at 8, MPC locally tomorrow at 2 p.m. Grant, are we going to see any rate cuts either in the US or locally?
No, I don't think so.
Break a man's heart.
I think what you might find, if the US recession risk grows, and I don't think it's there yet, that opens the door to further cuts by the Fed later this year. So second half of the year, I think cuts might come back on the table depending on how things play out. Especially if you look at, and then SA is a follower, and if you take in the context of a strong rand, strong commodities, and a lower oil price, we've kind of got a stealth easing. And if you roll forward 6 to 12 months, our inflation should actually be coming lower, or at least stabilized at a nice level that opens the door for the SARB. So I don't think it's off the table, but it's not the base case as the year rolls on.
Okay. David, have you got a more optimistic view for those folks with home loans?
I wish I did. I think it's due. You know, I'm in the camp that there is the margin to reduce rates, but we know the FOMC. I mean, we know the Reserve Bank very conservative, watching the US. But I mean, the gap's there. You know, there is even if it's on a short-term basis, and this is an economy that does need a little bit of love, particularly the local economy. I know we're confused by the strength of our market, of the JSE, but that's more to do with the miners and a lot of the offshore companies. Locally, the local businesses have been under quite a bit of pressure, and you can see it. I was just looking at those stats on Gautrain, Simon. You know, I mean, the amount of passengers they've lost. I don't know whether that's post-COVID or whether people just can't afford to travel on the Gautrain anymore, or just not working. I don't know what it says. Yeah. But it's the kind of stats that make us very nervous here. So we do need a bit of love.
Yeah. In fact, I remember someone, Sasha Neriskin from, he was at Vestec at the time, used to track toll plazas on the N3 for trucks. They would give us some useful data, but he's long since moved on and no longer doing that. David, let's start with you. Reinet, after the BAT sale, it's now got that pensions business. Is this looking like a good investment to hop on with the Rupert family?
Well, I've missed it. And I've missed it going up all the time. It seems to be a very good business, and there's no more BAT in it anymore. So at least we can understand what kind of businesses it is. I have to. Quilter's another one. If you look at that, that's why I'm saying, look, Mr. Quilter, a very good little operation, small. We didn't understand it when it was unbundled or split from Old Mutual, but you can't ignore it. So we need to do a bit more research on Reinet. Before committing, but I wouldn't say no. In other words, I'm saying leaning towards the positive rather than the negative.
Your take, Grant? I mean, certainly my understanding is that they're not going to give the money back to shareholders. They're going to use it. They're going to spend it. It's kind of, I mean, in some senses, I don't want to say he's our Warren Buffett, but you can kind of go along for the ride. Would you be interested?
Yeah, I think so. Again, I haven't been close enough. As David said, we also kind of missed it, but I like that pension business they're involved in, and there's still growth there. So it's a business where they can take on these pension fund obligations and manage them. And so that business has runway for growth. I don't know whether you're paying the right price here. I can't comment on that. But fundamentally, what's left in Reinet, I like it.
Yeah. And that pile of cash, where it might end up going. Grant, let's stay with you. A question coming through around China. Should I be buying a China ETF? There's 2 listed on the JSE. Or should I just go for Naspers or Process? Or should I avoid China altogether? Grant, how would you look at China?
So I certainly wouldn't avoid China. I think timing is a challenge here. This market has done, a number of these stocks have done 50% or more, some of the big caps. Alibaba, Tencent, and these stocks. So as to timing, it's a tough one. I would maybe average in over a few months because it's going to be volatile from here. As to the long-term outlook, the valuation relative to, say, the US is still cheap. Growth is beginning to stabilize and potentially even reaccelerate as they sort of re-stimulate the economy. they get comfortable with this, the consumer. They're starting to stimulate the consumer. And also the Chinese government is changing their story. They're not clamping down on business anymore.
Yeah.
They're trying to support business. The whole narrative is changing. I think you need to be more constructive on China, and any balanced portfolio, if you're a global investor, need to have some China exposure.
Yeah, and certainly Jack Ma and Xi Jinping apparently were seen having some tea recently. David, China, NASPAS, avoid, or I can't believe you're going to avoid China.
Through the consumer. I like to play it through the consumer market. In other words, luxury, or alternatively, the NASPAS process. I'm still a bit edgy about China. They've still got huge, the consumers there still have huge debt and are reluctant to go out and spend until the whole property debacle is sorted out, if ever. But we can't ignore how it's progressing. And I don't know if you've looked at Tencent's results this morning. Very good. Ahead of expectations. I've got to just understand my Chinese a little bit more. Haven't quite grasped the numbers. Chinese bookkeeping can be confusing here and there. But at least it's pointing in the right direction, and they've exceeded expectations. So I expect that to continue, and it's a good sign. I'm glad that that China is showing some kind of form now. But there again, it's a communist country. You've got Xi in charge. I suppose we can say that about Donald Trump as well. You never know what's going to happen tomorrow. So maybe I should withdraw that statement.
Yeah, and use DeepSeek for helping you with your Chinese. That should work perfectly. Touching on the Tencent numbers, David, I had a quick look at them. There was a time when Tencent results were a big event on the JSE. Not so much anymore, but those were good numbers.
They're very good. I looked at the gaming. The gaming numbers are great. That was the one worry that we had, because the Chinese authorities wouldn't release the games. And it's also a cultural thing. We don't quite understand that market and just how important this is to Chinese consumers. Their lives are actually consumed by technology. They're far more adept than we are in terms of understanding technology. So don't ignore it. Alibaba's done incredibly well.
Yep.
So you got the appetite for it, go. I'm thrilled by process and NASPAS, because I ignore the food delivery stuff. That doesn't interest me in any way at all. I just watch Tencent.
Yeah, well, they're still effectively a Tencent proxy.
Yeah, this is our entry point. Yeah.
David, let's stay with you. Question coming through from Woolies. Is it worth having a look at Woolies at current levels? Last results were what we've seen before. Australia struggling, fashion under pressure, food doing great. Would you be looking at Woolies at this point?
Probably not. We're getting to that level. As Grant was saying just before we went on, the market's strong here. The Joburg market, the JSE is strong, and you can't ignore it, and it's broad. But when we go through the results, when we actually unpick the results, there are a lot of issues there. There are a huge amount of issues, consumer under pressure, etc. But I don't ignore what the market says. When the market starts going up, it's also a sign, because people don't spend money on buying shares without having reasons. So certainly in the apparel retailers, we get into levels where they're starting to look attractive. You've got to take a view. But I'm not going to be pushed into it straight away. Just need a little bit more time. But once again, I think the signs are leaning to the positive.
Yeah. Grant, your take on Woolies? As I said, the food is absolutely storming. The fashion remains the challenge.
Yeah, Simon, the food is a star. I would buy food if I could buy it on its own. Question for me, I'm starting to really question the execution from management. I think Country Road is deteriorating as a brand in Australia, and it's underperforming the peer group. So it is tough in Australia at the moment, but they're doing worse than the rest. So that concerns me. The turnaround in FBH, for the past 2 years, there's been a story of why it isn't coming, what's happening, port delay. Way more than some of the competitors. So I'm questioning the execution. I think you actually need to sit on the sideline here until you actually see the evidence of the turnaround. The strategy looks a little bit unclear to me. Starting to look a bit like the old department stores in there when you walk into the clothing section with some of the different brands. And that's proven that strategy does not work. So I'm not sure why they're heading in that direction. I don't love the strategy.
Look, those department stores did work, but it was the 60s, to be clear. I mean, when David was frequenting Green Acres and John Orr's and the others.
All of them. Entities.
Yeah, I was Durban,
But
I think.
just country road as well, because I've been traveling to Australia I've got children there, I've got brothers there and that. And every time I go into a country road store like here, it hasn't changed in 20 years. Whatever the offerings are the same.
Yeah.
And that worries me. Every time you go in there, you say, I've seen this before. It doesn't look different. There's nothing attractive about it. And that's what Grant says, when he's worried about country road, and to an extent, Trenery as well, just looks stale. Very, very stale.
Okay, but let's go from fashion down under to South 32. Grant, question coming. South 32, is it worth having a look at with a nice blend of minerals being mined? South 32, Grant?
Yeah, this has been a surprising underperformer given the reasonably good little portfolio. What I will say is it's probably, if you want to be safer, play in the bigger miners, the bigger general miners. But if we are moving into a sustained commodity cycle, you'll be fine in a South 32. And it's not yet clear, but the dollar's definitely weakening. Commodities are definitely recovering their mojo. China looks to be recovering. And so South 32 is probably an undervalued general miner if you're willing to have a punt. It wouldn't dominate my mining portfolio, but I'd possibly look at, I think you'll be okay if you put some, but don't ignore the likes of an Anglos with a nice copper portfolio or some of the other guys.
David, South 32, or are you going to stay with the BHP or an Anglo or even a Glencore?
I would stay with BHP and that, but South 32, there was a point in our history where aluminium was really big, and we used to celebrate the fact that Billiton had aluminium. I don't know where it is at the moment. I know that lots of tariffs are being put on it, from the States to protect Alcoa, and I don't know how that's going to affect South 32 in any kind of way at all as well. But until we get this commodity boom, in full swing, or if it is going to be a boom, I'd probably still play safe with the Anglos and BHPs and, those that mine copper. And copper price is picking up.
Yeah.
It's each day I watch it, it's a little tick higher.
I got a question that came through here that said, is it worth having a nibble, and the nibble is underlined, in the Resi 10? And weirdly, I was having a look at it earlier today. The Resi 10 is now half gold anyway, with AngloGold Ashanti, Harmony and Goldfields. Is it worth having a nibble at the Resi 10, just getting a nice basket of commodities? You've also got some PGMs, and you've also got 5% Sasol.
Yeah, look, Sasol's becoming a smaller piece of that Resi 10. I like the Resi 10 because not everyone is comfortable picking stocks at any given time. So that little basket, and yes, gold is high now because gold has had a good run. So the ETF will balance itself, or the Resi 10 will, when Anglo starts to run and gold breeds or PGM start to run, it's going to rebalance for you. So you might not get the extreme moves of the single stocks, but it will save you having to cherry pick, this stock's going to go now and this stock's going to go now. So I think it's a good little retail solution to buy the Resi 10. I would look at it.
David, Resi 10 for you?
I agree. You know what? I'm the last person on earth that thought gold, would be where it is.
But
you can't ignore it. You know what I mean? I'm not, and I've never been a gold bull, but you can't laugh at a profit. It's and when it's on a move like this, let it go.
Yeah.
So you're not going to stop it. And also, I don't want to be cynical, the fact that I'm not there. But I think this has got more legs. As long as Trump does what he does, as long as he creates the uncertainty in that economy, you're going to get a shift away from the US into China, into Europe, into gold. So go for it. Yeah, don't be, if it's not working, just get out. But I mean, it is going to run. It is in a nice uptrend. So play it.
And at all-time highs, much like the top 40. David, let's stay with you. Question coming from Nvidia. I think it was your pick it wasn't last week. I was in budget a couple of weeks ago. Results have come out. Stocks actually come back. That PE's really unwound itself to sort of less eye-watering. Does this make Nvidia suddenly actually, hang on, a little more attractive now?
Very attractive. Very attractive. If you look going forward next year, on a 2-year PE, it's below 20.
Yeah.
It's below, and I listen to Mr. Jensen Wang, and in fact, that's why you'll see my stock pick. I just think when I listen to what they're spending, they're not slowing down at all. There's no slowdown in the amount of money that is going into the development of chips and into the development of data centers. Companies are going, so I've got to go with them. Not with some silly analyst sitting on the lofty towers of some investment bank, who's just finished his CFA or something like that. I'd rather listen to Mr. Wang himself, and say, this is what's happening, this is what's out there.
Yeah.
And I can't ignore those kind of things. That's why I'm saying I'm so attracted by the knock that they've given to all the Magnificent Seven. I think this just provides an opportunity. Patience, you've got to be patient, but this AI story is not over by any means.
Grant, I mean, when I got my first Nvidias, the PE was probably, I don't know, 100. And it's kind of done a Capitec on me, slowly unwound its way. And what the key lesson I learned with Capitec is when the PE unwound, the price didn't stop going up. Would you be interested in Nvidia at these levels, or is it still too rich?
No, it's starting to look interesting. I think you need to remember that the forward multiple is, you don't know what that number actually is, because
Sure. Yeah.
I think in the next 2 years, the CapEx rollout, if you start to see the big tech pull back on their CapEx spend, Nvidia can drop another 20% overnight. But if you're taking a long-term view, and you listen to Jensen as well, I also did hear some of his speech, talking about these new models, this DeepSeek, all of that, is increasing the workload. The chain of thought reasoning evolution in these AI models actually means more compute, not less.
Yeah.
So that actually ultimately plays out into Nvidia. I kind of prefer the TSMC angle because it's even more of a pick and a shovel than Nvidia is. But yes, I think Nvidia is a great business. I would be looking to buy on the pullbacks.
Yeah, and in fact, his CS address, he talks around autonomous driving, which at the moment is nothing for them, but he says it's going to be their
Simon,
next big thing.
They're ahead. They're not slowing down.
Yeah.
And they're doing everything to knock out any kind of competition. Everybody's, competition is going to come. Yes, somewhere down the line, but they're not letting you in.
Yeah.
And if you listen to the models that are coming, yes, and he's very honest about it. He's very open about the problems that they do face in trying to address a lot of the issues. I mean, the speed at which these things work is just, your mind can't get around it. But anyway, so I'm ready to abandon that for Philip Morris or a British American Tobacco or a bank that gives me a dividend yield.
Well, okay, David, you kicked that door open. My next question was about Old Mutual. Good results, but another bank. Is Old Mutual worth looking at? I mean, another bank. Although, to be clear, I was disparaging on the Discovery Bank, and well, here we are. So maybe I shouldn't talk. David, Old Mutual.
I've come under criticism because I thought they could do well in banking simply because they have such an incredible reach at the lower end of the market. But I think it's a lot harder to do it than just talk about it. And as we've seen, it's going to take some time, before this gets off the ground. But they have got the ability. They've got the customers.
Yeah.
I'm disappointed in Old Mutual. It's just been I think it's lagged. It's certainly lagged the discoveries, the momentums, and everything else. I don't know. I could come under criticism for that, but a bit of a laggard. And I think they need some fresh energy in there to keep this brand going and to regenerate the brand.
Yeah.
Maybe they came back from London with their tail between their legs and haven't quite got it going.
I mean, they're almost flat over 5 years. To your point, Discovery, momentum. There's a bunch that certainly aren't. Grant, Old Mutual with another bank?
Yeah, I don't have an issue with the bank. I think the idea is good. I have an issue with the general execution in the business. And that's what leaves me lukewarm on the business and the banking strategy. Show me some good execution, and then I'll believe it. I'm not buying and then hoping. I'm waiting to see before I buy that one. They don't have a good track record of delivery for a long period of time, especially compared to the peer group. So I'll stay out of that.
Yeah, no, and the same as Woolies. Show me first. Prove the management, then we'll talk. Grant, staying with you, a question coming through. I'm looking for a REIT with a decent-looking dividend yield for some income. What would your experts suggest? Grant, you're the experts. What's your favorite REIT?
My favorite REIT is NEPI, actually. I love the European portfolio. I love the yield you're getting in hard currency. Great management, great execution. nice pipeline of new properties, very well run, very conservative. To me, that's a great business. So I would look at Nepi. I know there are other good ones, but that's the one that I would start with.
Okay, Nepi.
And
David?
Europe's hot at the moment, eh? I mean, everyone's going into Europe. Europe's picking up. I mean, it's
yeah.
come off a very low level, but
That's an added
see
bonus.
now the euros completely outperform the S&P. I mean, by
Yeah.
big margin. I can't find any companies there that I really like. But as a, you know, as an index, you know, so, okay, buy the Euro Stocks 50. But when I unpack it, I say, would I buy it? Nah, don't want any of those. But things are happening there. You can't ignore that. And it's, you know, for the meantime, I think it's on an
especially
upwards.
Eastern Europe. Especially Romania, Poland. These economies are growing well above the average European economy. They're good.
And there is a sense that the what do we call it? The tensions with Trump and NATO and Ukraine, Grant, really is kind of waking up Europe. I mean, suddenly Germany's going to spend a fortune. Suddenly things look like they're starting to happen there. And to David's point, I mean, we're seeing money flow out of the US. It needs a home somewhere.
Europe is a sleeping giant. There's about 450 million people in that region, and there's a $20 trillion GDP. So the question is this their awakening moment, or are they just going to hit the snooze button? But let's see.
I'm laughing because they're still socialistic, you know. I always joke, you know. I've said it many times. Have you ever heard of a German hedge fund? You know, have you ever heard of it? Never. You know,
no, but they take siestas and eat cheese and drink wine. I'm happy with that. But David,
change it, you know.
David, you dodged the question. Maybe it's because you're also not your favorite REIT on the JSE for good yield.
I'm not a big REIT. I listen to Errol Shear, who always gives us him. His big pick is Vukile. He likes Vukile, and I suppose that. But also, I don't know whether he's in Nepi. But when I ever ask him what's the best one here, you know, and he kind of studies these. He knows them well. And looking at Resilient this morning, he still says no, Vukile much better one.
We hold Vukile as well. It's a good business.
Yeah, also good. Again, great management, which comes back to your earlier points, Grant. It's about management. Quick last question before we go to stock picks. Grant, let's go to you. Question came through. I own African Rainbow Capital. What are my options if I don't like the offer? I mean, Grant, you can vote against it. That really is your option at this point.
You can, but you don't want to be stranded. You don't want to be part of a 2% a minority, because you'll be left out in the cold completely. So you can vote against it, but I don't know if it's one you want to hold infinitely, you know, regardless of the way it goes.
Yeah, vote, see if you get enough people to vote with you, and if it gets turned down, and we've seen that before in this market. Let's go to stock picks. Grant, Deckers Outdoor. Never heard of it until you mentioned it.
That's the trick, right? You've never heard of Deckers, but if you know what they own UGG, the UGG shoes, those ugly things that everybody wants. And
I've got some on at the moment.
Those are your home shoes, David. And, I hope you're not in the office with those. But those and Hoka, those Hoka running shoes, which you're seeing them with a strong presence in a lot of the sports shelves now.
Yeah.
Very great new brand. This business is growing tremendously, both in the US and internationally, which is about more than a third of their business now. We're looking at high teens to early 20s growth. And it's trading in the mid-teens on a forward multiple basis. To me, this is a great business. It's had a big sell-off from its recent highs of nearly 50%. I think you're starting to see a nice entry level here. So that's my pick. Okay,
Deckers Outdoor. I know the brands, but I didn't know the business. David, you're going with the Signia FANG actively managed ETF.
I just think it's cheap. I just think that there's been a massive sell-off in the Mag 7. Just be patient. I think you're going to see a turnaround. I'm a great believer that all the uncertainty around Trump, you know, will reverse. That's why I'm so reluctant to make any major changes to a portfolio, because he's so unpredictable. And I think we're already seeing the backlash against so many of his policies, including the Chief Justice, who just came and rebuked him over, you know, wanting to impeach a judge. So I think Mr. Musk, Mr. Trump, all of those will eventually go to the headmaster's office, get a caning, and then start behaving properly. And the thing is that, you know, it can turn around. We're not facing this is a self-imposed crisis in the US. This is not COVID. This is not a great financial crisis. So I think this can reverse. So I think, and also I think those Mag 7 will start, not Mag. Hey, when I say Mag 7, ignore Tesla.
Mag
That's
6.
out the equation.
Mag
Yeah,
6.
Mag 6.
Yeah.
But put in Broadcom instead.
Okay, Broadcom.
So, yeah. So those, I'm still not abandoning my tech stocks.
Okay, that's all for Stockwatch today. Thanks to our guest, David Shapiro, Sasfin Securities, going with the Signia actively managed FANG Index, and Grant Nader from Benguela Global Fund Managers. Deckers Outdoor was his pick. Up next to close, stay watching.